Hello everyone and welcome to Finance for JCL. Today we're going to look at Intel and AMD, try to determine which is the better long-term investment, if any, and look at the valuations. As always, this isn't financial advice and your capital is at risk if you invest. So let's go. We'll start off by looking at the revenue and earnings of the two companies. And we'll start with Intel. So you can see the revenue across the top there, very consistent, no dips really in there, and it's just ticking up year after year. In particular, in the last 4 years or so, it's gone from around about 59 billion in 2016, all the way up to almost 78 billion in the trailing 12 months. The operating incomes rather, have always been above $12 billion, which is a very large figure. And it's been 24 billion in the trailing 12 months. So it looks like they've got some good numbers there. The net income follows a similar pattern in that it's always above 9 billion, and it's at 21 billion in the most recent 12 months. Earnings per share looks like it's increased to almost $5 a share when it was around about 2 3 years ago. And most importantly, the thing that I'm interested in is the free cash flow, because what I'm going to do at the end is try and work out, based on the free cash flow figures, the values for the business. We're up to $21 billion for the last 12 months. But just before I look at AMD, perhaps drop me a comment below as to what you think the best business would be to buy and why. So rather than wait to the end of the video, drop a comment in now just to get your opinions out there, and we'll see how that compares to mine at the end of the video. So AMD, smaller organisation in terms of revenue. You're looking at 6.5 billion in 2011, kind of around that 4 to 5 billion mark for the next several years, and it's just increased recently, 2020, to almost $10 billion. The operating income and net incomes have been pretty variable, negative in many years, but in the last year it's gone up to 2.5 billion, so there's been a big turnaround in the business, and that earnings per share is now positive and up to $2 a share. So next I want to look at book value and dividend. So for Intel, you can see that the dividends have been ticking up every year, 78 cents all the way up to 132 now. So very small increases, but it's incrementally going up. But most importantly, linked to that, the number of shares is going down, and that's helped increase the book value per share. So they had 5.4 billion shares, and they're now at 4.2 billion. So there's been a better share buyback. AMD is quite different. Earnings per share has been very variable until the last increase, 2020. But the number of shares has been increasing, so shareholders have been diluted. It's the opposite of Intel. They have still managed to get their book value per share up to almost $5. So again, a different story between the two. So important aspect of investing is the survival part. Is the company going to fail? Therefore, am I going to lose all my money? That's the biggest risk in investing. So for Intel, the current ratio is always very good. The lowest is 1.4 in 2019, but it's at 1.91 at the moment. And that debt to equity has always been, for the last 10 years, below 0.5, which for me is a very good value. That's looking excellent for Intel. AMD, again, the current ratio has always been above 1, and it's actually 2.54. So it looks like they can meet their short-term obligations. Debt to equity has been a bit all over the place, but it's down to 0.09. So both these organisations look to have, on the face of it, on these metrics, a very, very minimal chance of going out of business, certainly in the next 12 months. Industry and Moat, I mean, the semiconductor industry is competitive, but it's a growing industry for sure. Intel has a moat in terms of the name, the brand, what they've done before. I think AMD hasn't got that same history that Intel's got, but I think it's developing one, and they're certainly on the up. And let's have a look at the management. Before we do that, I'd just like to give a shout out to my VIP supporter via Patreon. And if you'd also like to do that, where we can talk one-to-one, talk as a group, you can get access to my investing wish list and a few other things. There is a link in the description below for the Patreon site. So Intel's profitability in this case, management ability, so the net margin has always been high. There was a little dip in 2017, 15%. They're back up to almost 27% now, so it's a really good, healthy net margin. The return on equity I like to focus on as well is the returns effectively the management's getting out of the business. That is 26% at the moment. That's always been good. And they've also been in the share buybacks that we mentioned. So the management appears to be managing Intel from the perspective of these numbers in a good way. Look at AMD, that margin's been all over the place, but it's suddenly now 25, 26%. And that return on equity is now 57%. So there's been a massive turnaround in that business in the last couple of years. So both businesses have good numbers on the board. The net margin, return on assets, return on equity. I think Intel's got the longer track record, but AMD is definitely on an upward trend. And also we look at the kind of insider piece. Now, there's been a little bit of insider trading at Intel with $2 million worth of shares purchased in the last 3 months. With AMD, the interesting thing is the president of AMD has a compensation package of $58 million, as well as owning $200 million worth of stock. And that's, to me, it's a little bit of an absurd salary, quite frankly. And it's much, much higher than the equivalent at Intel, orders of magnitude higher. So that's something that puts me off a little bit, especially as the company has been losing money in the past. I mean, I don't know when this compensation package came in, but that seems like quite an absurd number to me. But fair play if you can get it. So with that said, let's look at the price and value. So Intel's chart going back to 2000 on the left and the current period on the right. You can see that going from left to right, they haven't actually returned to their sort of dot-com bubble era price yet. And this is the danger of buying this kind of company. It can flatline for a long time, but if you bought it in 2017, you've seen a nice increase in 3 years. In fact, I'm a little bit annoyed with myself because I almost bought this company about a month or 2 ago when they were trading around about 45. For some reason I delayed, and now they're up to 60s. There could have been a nice quick kind of 30, 35% return there. But if we look at the historic P's 12, in general terms, that's quite cheap and below the overall market average. And the forward P is around about 12. So it doesn't seem like an expensive company from the P ratio perspective. We look at AMD, we talked about the turnaround. 2016, you could have bought those shares for 3 or 4, and now it's 78. So anyone who picked that one, hats off to you, you've done really well. So AMD has got a different profile there. The historic P is 38 and the forward P is 31. So it's, as a growth company, probably you'd want it to be growing at sort of 30% a year to justify that forward P of 31. Yeah, different stories, 2 totally different organizations here. Really interesting to see. So from the story perspective and how I'd categorize it, you kind of look at it and say, analysts are saying it's going to go about 5% a year for the next 5 years. Had been growing at 19% a year. So a bit of a slowdown. I think they've lost some contracts. So the PE of 12, you'd expect that to be on that lower side. And they are worth round about $250 billion. So this is a massive organisation. You're not going to see that many companies of that size growing at double-digit percentages per year. And on the right, you see the consensus on Yahoo of the analyst expectations. Not many people saying sell. The biggest number there is hold, but there's quite a few saying it's a buy, actually, in the most recent month of March. Lots of buy and strong buy. So the analyst sentiment's improving. Not that that is a decision point, but it's just interesting to see a trend there. AMD, now we're looking here, next 5 years, 26% growth. So essentially justifies their E ratio. It's been 40% the last 5 years, but they're only worth just shy of 100 billion. So they've got a bit more of a run rate to grow to a larger organisation. And when we think about the Peter Lynch classification, I think Intel is definitely stalwart, and AMD is what you'd call the fast grower. And Lynch likes those ones that are around about sort of up to 25%. And if you're going faster, then that's almost too fast. So that fits just about into that category there. So we've got the view. So that now means we can do the bit you've been waiting for, which is calculate the valuation between the two. So I'll start with Intel. Their free cash flow, 21 billion, as per last filings. I'm going to use a 10-year growth rate of 5% per year, and then the kind of perpetual growth rate ongoing after that to infinity of 3%. And I want to aim for a 10% return. So I want to discount the free cash flow calculations by 10%. That gives an intrinsic value of $85. Price, as of a couple of days ago when I put the information together, was 60. So there's a margin of safety there of 29%. Not the 50% I prefer. And my cross-check against Simply Wall Street, they're actually saying the fair value is 52, so it came out quite a bit of a different number to me. And they don't look quite so far ahead in terms of the growth. AMD, free cash flow, much lower, 777 million, a 25% 5-year growth rate in, and then growing at 3% a year after that. Again, 10% discount. So that makes them, for me, worth 25 with a price of 79, so there's no margin of safety. Simply Wall Street reckons they're worth 50. That's quite interesting. I've got quite different numbers on this occasion. But in both cases, Simply Wall Street reckons the companies are overvalued. So if I'm looking at it from a value investing perspective, I would not buy AMD. I would have Intel on my watch list. And then when that price dropped down to the low 40s, then I would buy. So for me, Intel's better investment. However, if you're not investing from a value investor standpoint, you may be looking at AMD thinking, PE and 5-year growth rate, earnings go up. I might fancy a piece of that. And I think one of the big differences between them is Intel's historically done most of its own manufacturing. It's been slower to sort of respond, retool for different changes, but they can create higher margins. Whereas AMD, I think, historically has outsourced a lot of the stuff, so they've had lower margins, but they've been able to be more agile. It'd be interesting to see how those approaches vary. So there we have it. That is the analysis, Intel versus AMD. I'd be really interested to hear your thoughts on that. If you could drop some comments below, get some conversation going, that'd be pretty interesting. And the best thing to do if you found this enjoyable is hit that like button so it sort of spreads the word for this analysis that more people may be able to see it. So yeah, thank you for joining me on this one, and I look forward to seeing you next time.